Hi everyone, welcome back to my channel. In today's video, we are going to learn one of the most important basic accounting concept, that is accounting equation. If you are new to accounting, this is one concept you really need to understand because many accounting topics later will be built on this idea. The accounting equation is very simple. That is, assets equal liabilities plus equity. Let's break this into three parts. Assets are things the business owns, liabilities are debts the business owes, equity is what belongs to the owner. Every transaction affects at least two accounts, but the equation still remains balanced. Let's look at these three parts in details. Assets are resources that help the businesses to run and earn income. Examples like cash, inventory, equipment, and account receivable. If a business owns cash in the bank or a computer used for a work, those are assets. Let's look at liabilities. Liabilities are amounts the business needs to pay back. These can include loans, unpaid bills, and taxes payable. If a business buys something now and pay later, this will create a liability. Equity. Equity is the owner's share in the business. If the owner invests money, equity increases. If business earns profit, equity also increases. If owner withdraw money from his or her personal use, equity decreases. Now, the most important thing to remember is this. Every business transaction affects at least two accounts, but the accounting equation must always stay balanced. Let's look at some examples. If the owner invests $5,000, cash increases and equity increases. If the business buys equipment on credit, assets increases and liabilities increases. If the business pays rent, cash decreases and equity decreases. No matter what happens, the equation stays balanced. There is also something called the expanded equation. Simply, it is break down the equity components. Simply, the revenue increases equity, expenses decreases equity, and drawings also decrease equity. This helps us understand how profit affects the business. Let's look at why the accounting equation matters. The accounting equation is important because it helps to prepare financial statements. It helps accountants to check whether their records are balanced. It also shows the financial position of a business at any time. This is why this equation is used in every accounting system. So, here's a quick recap. Assets are what the business owns, liabilities are what the business owes, equity is the owner's share, and the golden rule you should always remember is asset equals liabilities plus equity. Thanks for watching my video and I'll see you in the next accounting lesson.